All right, I'm gonna go over crude and just go over some turning points and explain how they occurred. So let's chop it up. All right, so we'll take a look at this uptrend and then the downtrend. So you see that over here, price rally $320 on 75 minutes, pulled back 290 in 40 minutes, and eventually had a spring, which was followed by this strong rally. So this weakness, where the market went down on 10 minutes at $240, led to a rally. Why? Because weakness begets strength from the other side. So this weakness here um, from the bears, this inability to follow through, this spring, this shortening of the thrust, whatever you want to call it, shortening of the thrust in the context of a trend or spring in the context of a range, initiated this move up. The spring lasted 10 minutes and went down only $240 and initiated this change of behavior, which was $600 in an hour. All right. And the market obviously pulled back right there for 15 minutes, 250 bucks, went sideways, did another spring of this area, and then initiated the move up. So let's say you're up here and you're looking at this background. There's certain things that are really important. One is keeping the eye on the volume. It's about 155 with two zeros, so 15,500 contracts. So it's just important to note that when you see a dump. Anyway, so the market goes up here. Here it starts getting interesting. Why? Because it spikes up right here, and look at the thrust. Look at the thrust. And then after that, there's a shortening of the thrust. So this is weird behavior. Why is it weird? Because it pops up, looks like it's one bar, and then it's unable to follow through. So this, I don't want to call it an up thrust, but it is a shortening of the thrust in the context of this trend, is immediately preceded by a move down of $420 and 20 minutes. So basically what happens is you have this massive thrust, relatively speaking, which is the biggest. It's even bigger than the initial move. So obviously there's something going on over here. Why do you have so much of a thrust when it's at like the top of a trend? And after that, there's nothing. It's a 5-minute move and it goes straight down after that. So basically it's a shortening of the thrust followed by selling. So you can clearly see this thrust becomes negligible. I don't like to call it an up thrust because it's in the context of a trend. And after that there's selling, and this selling has the biggest volume in 13 waves. It's $420 down, and look at the volume. Okay, now there's a couple of things to note. On the left hand side, what type of action is responsible typically for terminating trends? And I'm not saying this is the only type of action, it's very obvious though. It's usually climax or shortening of the thrust. Here we have a shortening of thrust or a secondary test of this potential climax, which has high volume, about 12300. After that there's selling. So left hand side, right after here, after this selling wave, we're on the right hand side of the range. And you're going to notice this bar, very important, because it cracks with a good bar that breaks this low. I don't really consider this, I want more, but it it's like the bare minimum in terms of a breakout. It's just this type of action, this reversal here is very important. Okay. The other thing that, but what I don't like is that when the selling came in, it didn't break these lows. You know, it needs to be an extended wave that breaks these lows. In any case, what you see here is $420 down on 20 minutes. So that's an increase in both price and time. It's an increase in price and time of 1, 2, 3, 4, 5, 6, I don't know how many waves. 7, 8, 9, 10. So that, in terms of price, is very meaningful wave, but I still don't like the fact that I didn't break these lows. Anyway, you're on the right hand side of the range, so now what you're going to do is start looking for weakness to confirm exhaustion. Exhaustion is coming from either shortening of the thrust or climax. Here you have an indication of climactic action, this wave, and a shortening of the thrust, but in this case it's more like a secondary test, you know, because it just bobs up like that next to the climax. So that's the left hand side. This is the limiter between the left and the right, and now you're on the right hand side of the range. And what do you see? As it goes to support, it bobs up only for 5 minutes, $210. This is an indication that the buyers are exhausted. Then it tries again, 5 minutes, $250. A test and an upthrust indicating buyers are exhausted. Then it goes down and it attempts to rally. And when it attempts to rally for 25 minutes, it can't take out the high. What is that telling you? Buyers are exhausted. It is confirming the exhaustion that occurred here. It's confirming buyers were exhausted. On this move up, you don't know whether buyers are exhausted or not. You need to be on the right hand side of the range to confirm whether buyers have been exhausted. Otherwise, this move to support will just be bought and buyers will just take it up. But when they try to, they can't. How do you know? From the perspective of time, it's only a 5 minute wave. And the second one is only a 5 minute wave. Exhausted, they can't go up. Exhausted, they can't go up. Try finally for 25 minutes, exhausted. Reversal, crack. So, what do you learn from this lesson? You learn that, yeah, this is a climax. Even though it's 1 or 2 bars, it doesn't matter. It happens. You learned that this is a shortening of the thrust. What's very important about this shortening of the thrust is the bar right after it. If this is a type of bar that's a breakout bar, you know, it's like, but it's in the other direction. Instead of going up, it's down. All right. Why? Because it's basic. I have a term for it, but I'm not going to go over it. And it finally goes down. So on the biggest price and volume since 13 waves, and then it's exhausted, exhausted, exhausted. And that trend has to break. Why? Because it's confirming exhaustion. So at a minimum, it's going to go to the next level of support where the buyers were. And they're not there. So it goes to the third level. And it continues. Alright. Other things to note, RBOB and Brent, they're both in lockstep. Alright, so that's good when they're all falling at the same time. That's good. Alright, now I'm going to take a look at one other trend. This here is actually a counter trend. I'll remove all this. So this is a counter trend. You do not trade counter trends, but if you know how to, you can. is just remember one thing: the reward sucks. All right. So this is just the counter trend to go and test. So you take a look at this, and what do you know? You note that the market is going down, down, down. And what is going on with the thrust? It is decreasing. What's going on with the volume? It is decreasing. It is little. It is not good. So you have the shortening of the thrust. That's one thing that you have going for you. And again, shortening of the thrust is like, in the context of a trading range, it just looks like a spring. There's a spring. And you see how weak it is, meaning it's like a little bar, like how should I say, like a little range, you know, not too much. That's the best kind, by the way. Anyway, so it goes down, down, down. You have shortening of thrust, and then you have this wave. That's only 10 minutes, but what is striking, what sticks out about this is the dollar value. For $940. That's bigger than 275, 675, 345, 355, 350, 495, 420, blah blah blah, all the way until up here, 1310. So this is demand. There's demand coming off of this spring. There's demand coming off of this shortening of thrust. This is demand. Now, what else do you notice? It has cause in the background. What do I mean by cause? Cause is this idealistic view that cause is in a box that's horizontal. Is very idealistic. The cause here is in a series of waves that are clustered. So this is cause. All right. You could tell one of the things that you could see is this big strong bar. That's the initial buying, that's why. And then springs it and then does that. So this is cause in the background. That's the first thing. Second is a shortening of the thrust or spring. All right. And third, and now after that, on this rally here, you have this bar that breaks 1 and 2 highs. And a big wave, biggest in these since 9 prior waves. So this is the delimiter between the left hand side and the right hand side. It's on, the only problem is it's only for 10 minutes, but you need to understand what that means. It means that overhead supply is gone. Why? Because 10 minutes down on the prior down wave was able to go down $615, but here 10 minutes is able to go up $940. How could that be? It is only because there's less overhead resistance, so price can go higher. There is less overhead supply, so price can go higher. Sellers are not there. So it cracked 10 minutes. Now that's the delimiter between the left hand side and the right hand side of the range. And now you're going to watch on the pullbacks. So on the pullbacks, you're looking for key behavior. 1, spring. 2, effort reward. 3, lack of supply. That's it. And in this case, you get effort reward. How do you know it's effort reward? Because this move up is on 10 minutes that does $940. This move down for 20 minutes only does $510, about 60% in double the time. Double the time and almost half the distance, telling you there's bag holding. And if you see, the volume here is greater than 1, 2, 3, 4, 5 waves. So more volume, more time, but less distance. Why is that? It's because there's bag holding here. There is effort here. Market cannot go down because of the opposite reason of this wave. This wave that's 10 minutes had a lot of speed because there was a lack of overhead supply. So it was able to, in 10 minutes, go up $940, whereas the wave before went down only $615 in 10 minutes. So there's a lack of overhead supply. But here, when it goes down in double the time, it is unable to make a lot of progress. Why? Because they're buy orders. The buy orders are supporting the market. As this market attempts to go down, it's finding buyers, 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 buyers. As this market was going up for 10 minutes, it was finding lack of supply, lack of supply, lack of supply, less selling order, less selling order, less selling order. On the way down, more buying order, more buying order, more buying order. So it's the opposite. And that's bullish. Lack of supply on the way up and buy orders on the way down. Lack of sell orders on the way up and more buy orders on the way down. Anyway, so after that effort, you have this thrust, which initiates markup. This thrust is a markup bar. It's occurring after effort reward, after all those buy orders are there, and telling you the market's going to go higher. And it does. It goes higher, but here it runs out of steam. Why? Because you're at resistance, and people don't want to buy at the end of the day near resistance. What's going on here? You see it goes from 15 minutes to only 5 minutes. After that, only 5 minutes. There's no lasting power because these waves are only lasting 5 minutes. They're only lasting 5 minutes near a resistance area. Now you don't know. I mean, I look at this, I know it's shortening of the thrust right here, right? I mean, they're trying to go up, but they can't. They can't. But the key is after this bar, then you know it's game over for the bulls. That's all, folks.